Welcome to Bloomberg Markets. I'm Scarlett Fu. The disinflation narrative hits a bump in the road, and traders immediately refresh their bets on the size of a Fed rate cut. Here's how it's playing out in financial markets. You have stocks. They stumbled out of the gate, with the S&P 500 at one point falling as much as 1.6% after the government report showing consumer inflation unexpectedly rose in August. The Nasdaq, the clear outperformer here, in that it is down by 0.25% as opposed to the S&P 500's 0.8% decline. But you have financials, the main decliners, whether you're looking at the S&P or the Nasdaq. Now, treasuries have been all over the place. They plunged initially after the CPI print, sending yields higher before recovering. The 10-year yield now marginally lower, little change really, at 3.64% before a 10-year auction of $39 billion worth in the next hour. And Bitcoin sliding after the presidential debate. Crypto has become part of the Trump trade overall, which are assets that move in tandem with Trump's election prospects. Let's go back to equities for a moment here and zero in on some individual movers on the equity side. And for that, we bring in Bloomberg Markets correspondent Abigail Doolittle. Abigail?
Well, Scarlett, this may be another piece of the Trump trade here, and this is Berkshire Hathaway over the last 2 days. Not that Berkshire Hathaway is associated with Donald Trump in any way, but it is one of the most highly taxed entities in the world. And of course, the former president talking about the possibility, if he were elected, a 15% corporate tax rate. So that would clearly benefit a company, an entity like Berkshire Hathaway, along with Apple, Microsoft, and some of those other largely taxed entities. You can see over the last 2 days down, but really today, after that debate, down 2.5%. This is the worst point drag, in fact, on the S&P 500. And I would argue in some ways it is a proxy for the S&P 500, but clearly the declines are outsized. If we take a look at what's happening beneath this surface to both the upside and the downside, First Solar up about 13%. You could maybe say that's in favor of VP Harris, green energy. NVIDIA up 2.9%. That may also be in favor of VP Harris, given the idea that J.D. Vance, the running mate, of course, with Donald Trump on their ticket, is perhaps wanting to break up big tech. NVIDIA not really a piece of that, but big tech, most of it for the most part doing okay today. Humana down 5.5%, and this healthcare insurance company, it's interesting. This could be seen as an anti-Trump trade. In addition, some of the Medicare stocks, in fact, trading higher, which would go in favor of Kamala Harris. And then finally, J.P. Morgan Chase, having nothing to do with the debate at all, down about 0.6%. And of course, yesterday having the worst day in quite some time since 2020, after President Daniel Pinto, the president of J.P. Morgan, I should say, Daniel Pinto, said that analysts were way too optimistic about net interest income. Really a tell, perhaps, on the state of the economy. Some jitters there. I would argue that that could be shaping some of the market action today. And then finally, a completely idiosyncratic story of its own, Scarlett. Take a look at the shares of designer brands, down 16.6%. A pretty bad plunge. This, of course, is the parent of DSW. They missed numbers. Their comp's not great. The guide missed. So there's some weakness here. Yet another tell on the state of the consumer. DSW, where you can get nice shoes, designer shoes at a more discounted price, well, they're not doing so well.
Yeah, it speaks volumes about where the consumer is at and what that might suggest about the economy going forward. Abigail, thank you so much. We'll check in with you a little bit later in the hour. Now, earlier today on Bloomberg Television, J.P. Morgan's David Kelly gave his take on where we stand with inflation right now.
It's very much on track. And I've been talking for a long time about, how the economy is, or how inflation is cooling. It's just cooling too slowly. Well, I can say that it is now cooled to room temperature. I mean, at 2.5% year over year, there really is not a significant inflation problem.
For more on the latest inflation data, let's bring in Stuart Paul from Bloomberg Economics. So, Stuart, the big picture here is that disinflation is still intact, but there was this one part of the report that indicated core CPI rising more than expected, 0.3%. What drove that unexpected pickup?
It's great that you use the terminology that inflation, the disinflation process hit a bump in the road. We did take a little bit of a detour, and it was because of travel in August. 7 basis points in core CPI month on month came from hotels, which increased in price about 1.8%, from airfares, which increased nearly 4% during the month of August. So we are seeing a little bit of that feed through from higher energy prices earlier during the summer, feeding into airfares within the core here. We should see some of that come back as we see future inflation prints. But with just 7 basis points coming from those two categories alone, which we think are going to be temporary, we don't take much of a signal from today's core CPI that anything is going to stop the Fed from cutting when the FOMC meets.
Okay, now also according to the BLS, shelter was, quote, the main factor in the overall advance. When we say shelter, what does that mean? Is it rent? Is it owner's equivalent rent, which is basically what we pay to service your mortgage?
The three primary subcategories of shelter are primary rents, owner's equivalents of rents, and lodging away from home, mostly hotels. We know that hotels ticked up at an accelerated pace. We also saw owner's equivalent of rent rise about 0.5% during the month, up from just under 0.4% in July. So that housing inflation that we've seen persist, the choppiness that we've seen over the past several months, that's continuing to be a problem. But it is the sort of thing that the Fed reads through because of how slowly housing inflation moves.
How slowly housing inflation moves. So does shelter become a leading indicator, a lagging indicator, or a coincident indicator of where prices go overall?
It's a good question. It's primarily a lagging indicator. You can look at, so the first thing is that the BLS infers owner's equivalents of rents based on rent, based on actual leases that are signed.
Okay.
But that takes about 6 months. There's a 6-month process and survey window that the BLS uses. And it also takes time for leases to turn over and for price pressures to wane for actual primary rents. So it is definitely a lagging indicator, and it can take upwards of a year for waning price pressures experienced by the consumer when they're signing leases to actually show up in the BLS data.
So bottom line, the Fed can't declare victory on inflation just yet, but things are still headed in the right direction.
Things are headed in the right direction, and a lot of the main drivers of core inflation in August, the Fed can read through when it's setting policy.
All right, fantastic stuff. Stuart Paul of Bloomberg Economics, thank you so much for putting that all into context. Now, for more on how this data is being received in the markets right now, let's bring in PGIM Fixed Income Chief Investment Strategist Robert Tipp. Robert, certainly you look at the market reaction and stocks tumbled right out of the gate. Treasuries had a bit more of a, let's just say, inconsistent reaction. What is your take here in terms of the signal that investors are giving to this latest data?
Sure. You know, I think as Stuart was going through, the underlying message here is that the inflation situation is coming under control and is 180 degrees diametrically opposed to what we were looking at, say, a year and a half ago, when inflation was high and broad-based. Now you have inflation that's low. Ex-food, energy, and shelter, over the last 4 months, inflation is running at less than 0.5% annualized. Running, well below target. The only thing holding it up are these factors in shelter. And those, when you're down to when inflation is narrow, that's not something that the Fed can really pinpoint and control. It's not a generalized problem for them. So a totally different world in terms of inflation that arguably maybe had it below target. At June, you couldn't tell. Inflation, we're all in a transitory, traumatic stress syndrome. We had seen low inflation the second half of last year. It popped up earlier in the year, but as you can see in your diagram here, it's all core services that are holding it up, and that's primarily shelter.
Right.
So very good news on the inflation front overall.
So services is a little bit more of a concern because sometimes the prices in services can be stickier than the prices in goods. The Fed, we know, has a dual mandate to maximize inflation and to maximize employment, and manage inflation. And you can argue that inflation was the #1 priority during the hiking part of this cycle. And of course, employment is going to be the fixation for the cutting part of the cycle here. So how do this week's CPI print that we got today, and of course tomorrow's PPI print that we're getting tomorrow, how much will that answer the question of whether the Fed cuts 25 or 50 basis points? Or do we need to see the employment data for the Fed to make that final determination?
Right. I think we have all the information we need. I think that the differences between, say, the US and Europe, services in Europe are sticky, the inflation rate is high, and the wages inflation is running high relative to productivity. In the United States, it's really the rents, it's not the wages. So I think the Fed's degree of anxiety on inflation is something that they're going to watch, of course, but I think the anxiety is gone. I think the anxiety has shifted 100% for all practical purposes to employment. Employment that, as of June, looking backwards, was growing at a really solid pace. You could quibble about whether you like the kinds of jobs being created, but it was a solid pace. Now, between the prints that we've seen in the revisions, excuse me, you have a rising unemployment rate and an unacceptable rate of job growth. And so the Fed, I think, is going to start with 25.
Okay.
Before they went into the blackout period, they did not signal 50. But I think what we're going to see from them is a desire not to alarm anyone, but the notion that they may need to be neutral or accommodative. They need to bend the line. They need to get a little bit higher rate of job creation at this point. And frankly, for most of the components of inflation, they're running below pre-COVID levels, which, if you recall, was when they were going from 2 3/8 into the ones with an unacceptably low rate of inflation. So this is a 180-degree turnaround from where they were 3 months ago.
Absolutely. So, Robert, you had mentioned Europe. The ECB, of course, meets tomorrow and is expected to cut rates for a second time. I know that this won't influence what Jay Powell and company do next week, but talk about how the ECB's being ahead when it comes to cutting rates, ahead of the Fed at least, means for how investors adjust their holdings of European sovereign debt versus treasuries.
Sure. Well, I think big picture, rates have revalued. I mean, the ECB was at -50, they hiked to 4, now they're at 3.75, and they're on their way down. But we're at a dramatically higher level of interest rates than we were, for the prior decade. And this is an attractive level of yields in Europe, even though it is lower than the US. Like I said, the service inflation is holding up in Europe. They're going to be a little bit more cautious, but their mandate allows them to manage growth such that it's at a level that they think will be consistent with 2% inflation, and growth in Europe is too slow. So they're going to be cutting rates, but at a pace that's probably slower than that of the Fed, because they're going to need to see more information on the inflation side showing that they are really getting back down to target.
All right, Robert, really appreciate your joining us and sharing your perspective. Robert Tipp is PGIM's fixed income chief investment strategist. Coming up on Bloomberg Markets, we head to Philadelphia for a live report on the fallout from last night's presidential debate. In the market today, we do see shares of Trump media under pressure. You can see down 11% over the past 2 days. By the way, the company also facing the end of its lockup period as well. We're going to talk about the upcoming U.S. election, where things stand right now, next. This is Bloomberg.
She has no policy.
His plan is to do what he has done before, which is to provide a tax cut for billionaires and big corporations.
What they have given to China is unbelievable.
His next big court appearance is in November at his own criminal sentencing.
In Springfield, they're eating the dogs, the people that came in. They're eating the cats. They're eating the pets of the people that live there.
The President of the United States incited a violent mob to attack our nation's capital.
I probably took a bullet to the head because of the things that they say about me. They're the threat to democracy.
Donald Trump was fired by 81 million people, and clearly he is having a very difficult time processing that.
This is Bloomberg Markets. I'm Scarlett Fu. Last night, Americans were able to see former President Trump and Vice President Harris face off, outline their plans, and, of course, target each other's records. This morning, the two were at the 9/11 Memorial in Lower Manhattan, along with President Biden. Let's go now to Bloomberg's David Gura, who's in Philadelphia and joins us live. David, you were at the venue for yesterday's debate. You were also in the spin room as well. I know that this happened last night. We've moved on since then, but I'm curious about what your impression was about the mood and the vibes in the room after the debate wrapped. I'm sure it contrasted dramatically with what happened in Atlanta after the Biden-Trump debate.
Yeah, you go back to that debate in June, and afterward there was this kind of weird silence that was overlaying the whole place. We went down to the spin room floor, and it took about 10 or 15 minutes for the Democratic surrogates to come out and meet with reporters. This was a much more traditional or normal spin room. In fact, some people were out spinning and talking their candidates' books before the debate even ended. It went a little longer than it was supposed to. But look, we talked yesterday just about sort of the objectives each candidate had, and Vice President Harris wanted to talk about policy. She kind of sandwiched a lot of comments about style, efforts to bait former President Trump into a sandwich of policy. She talked about economic policy at the top, talked about it at the bottom as well. I think it's suffice to say this was a big success for her last night. She came across as somebody who could fill that office as president, seemed presidential, and as I say, was able to kind of get Donald Trump off his game over the course of this debate. I mean, his advisors wanted him to talk about policy and wanted him to seize on just a handful of topics, wanted him to talk about immigration from a policy perspective, wanted him to talk about the economy, wanted to talk about this kind of line of continuity that he sees between what a Biden presidency and a Harris presidency would be like. And over again, as we heard in that tape just a moment ago, he kept getting derailed, taking the bait, and this was not the debate that he nor his advisors wanted to have last night.
I'm curious what else happened at the debate that we didn't get to see because, you know, we went to commercial break, for instance. Were you able to see on any monitors, for instance, what was going on during those breaks in between the questions?
We weren't, but I kind of read the pool report and sort of got a sense of the frostiness that was in that very intimate studio. They were standing very near each other. It was just them and the two moderators from ABC News in that room. And we talked yesterday as well, Scarlett, just about this mute button and what effect that would have. It was interesting to see sort of how Vice President Harris dealt with that. She didn't want to have that mute button, and you saw her using phrases or mouthing phrases like, "That's not true," which were legible to even a novice lip reader like myself during the course of that debate. So she was able to do that kind of effectively. And in the room, in the spin room where we were, which was also the media filing center, you know, there was a good deal of kind of reaction to the debate thus far during those breaks. Then I should say afterward, we had the surrogates come in, and there was the announcement from a surrogate who was not present, and that's Taylor Swift, the international pop star. And when that endorsement came through, there was kind of a frisson or a buzz throughout the whole filing center as reporters were showing each other their phones and looking at the now famous Instagram post of Taylor Swift and a cat giving her endorsement to Kamala Harris.
Yeah, love Taylor / childless cat lady. Did Donald Trump, because he did show up in the spin room, or any of his surrogates say anything about the Taylor Swift endorsement?
They didn't address it specifically, and I talked to Michael Whatley, who's the head of the Republican National Committee, and it was interesting. He and I talked about the debate. He was happy with how it unfolded. He didn't have a pessimistic outlook on how it went or where things are headed. And notably, he said he'd like to see more debates. That is in stark contrast to what we heard from former President Trump this morning. He said he would be disinclined to have another debate. You look at the other candidate, Vice President Harris. I talked to a number of her surrogates yesterday after that debate, and all of them to a T said they hope that as a means of carrying momentum forward, there will be at least one other debate between these two candidates. Now, as we talked about, the calendar is pretty short here. There's a vice presidential debate scheduled in New York on October the 1st. A very open question here if we're going to see these two candidates on stage once again and sort of what that debate might look like if it happens.
Yeah, you mentioned the vice presidential debate. I mean, Trump didn't do his VP pick any favors by contradicting what J.D. Vance had said about, you know, a so-called abortion ban. Is J.D. Vance helping or hurting Trump's ticket right now?
J.D. Vance is proving to be a bit of a difficulty for the former president as he campaigns. So we were talking about Taylor Swift a moment ago, childless cat ladies, as you referenced. This is a comment that he made when he was campaigning for Senate just over a year ago when he was having an interview with Tucker Carlson, who was then with Fox News. It's taken on a life of his own, and we know very well that Donald Trump doesn't like to have any distraction from him and his messaging, certainly not by a running mate. So he is a bit of a liability in that regard, and you bring up this issue of abortion. I mean, this was a moment during that debate when Donald Trump started out by talking about abortion policy in a very traditional Republican way, saying it should be left up to the states to decide what that abortion policy is, but then moved to great exaggeration and conspiracy theories. And the point of contrast with J.D. Vance is that he talked about vetoing, allowing a national ban on abortion, and Donald Trump saying that he disagrees with that in the moment, that it's something that he and J.D. Vance have a disagreement on. So there's the nagging history of what J.D. Vance said before, and there's also just these kind of disagreements that have come to light since Donald Trump has picked him as a running mate.
All right, Bloomberg's David Gura live on the scene in Philadelphia. Thank you so much. Coming up on Bloomberg Markets, we're going to head over to Cantor Fitzgerald's trading floor with one of the celebrities attending the event, NFL star Victor Cruz. He's raising funds for charity as Cantor Fitzgerald marks 9/11 with its special fundraising event. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. On September 11th, 2001, Cantor Fitzgerald lost 658 employees in the World Trade Center terrorist attacks. Since then, the Cantor Fitzgerald Relief Fund has focused on giving financial support to families affected. More than a dozen celebrities are on the Cantor trading floor. They're calling clients in an effort to raise money for their own charities as well. We're joined now by former NFL player, longtime New York Giant, Victor Cruz. Victor, thank you so much for joining us. How's it going there on the floor today, and how much money are you making for the Victor Cruz Foundation?
It's going well here on the floor. There's a lot of energy, as you can see behind me, a lot of things going on, a lot of different celebrities making their way through, and we're making some money. I don't have a full tally just yet, but I know I've been making a bunch of trades and raising some money for not only Cantor Fitzgerald, but for the Victor Cruz Foundation as well.
Right, and I know that celebrities like you are asked to kind of fulfill some of the orders. Can you give us a sense of what people are buying or selling? Is there a lot of talk of, say, NVIDIA or the Trump media company coming up?
I actually can't tell you that. I have no idea, to be honest. I know that I've just been making some solid trades, and you know, it's always interesting when you're just throwing $20 million, $30 million around like it's nothing. It's always a fun time yelling those numbers out.
Yeah, absolutely. I can imagine. I want to talk to you about the changing landscape of the NFL, because clearly this has been a big offseason with the NFL now allowing private equity, institutional investors to take stakes in certain teams. I'm curious to hear from you how you think this is going to change the player's experience, what it means for big money to come into the game like this.
It'll be interesting to see how it changes. It'll be interesting to see how these players kind of think about their deals differently, how to think about their extensions differently, you know, realizing what markets to play in, what markets not to play in, what teams they want to be part of, who's owning these teams, and what type of investments they'll be able to do within them as well. So I'm excited to see where the future of this is. You can see more and more ownership going just into the players and having more control. And who knows, we might have a former player be able to be in one of these investments and own some of these teams and be part of it from an equity standpoint, so it could be fun.
Yeah, Curtis Martin, of course, football Hall of Famer, is definitely part of these efforts to get more players of color involved as well. Very quickly here, I know that you did not play football in an era of legalized sports betting, but that's got to be hard for the players who are still in the NFL right now.
Yeah, it's very difficult, and you've already seen some guys kind of get in trouble with it as well. But it's just hard to police, especially, you know, the way how legal it is and how, I mean, all my friends around me are doing it. So it's just going to be interesting to see how they police it from inside the game when you're an actual player and how they do it moving forward.
Victor Cruz, always a pleasure. Thank you so much for joining us. Former New York Giant football star Victor Cruz down at the trading floor of Cantor Fitzgerald on their charity day. Coming back, we turn back to the markets as investors continue to make sense of the latest inflation data. This is Bloomberg. Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's take a look at how markets are tracking right now, because stocks have come off their lows. They're still down. The S&P 500 losing 0.4%, but at one point it was down 1.6% on that hotter than expected inflation print, consumer prices at least. The Nasdaq, the better performer here, gaining 0.4%, and we'll get into some of the individual movers there. A lot of movement in the Treasury space, but right now the 10-year yield little changed, up almost 2 basis points at 3.66%. There's a big auction coming up, $39 billion of 10 years being sold in about 30 minutes time. And Bitcoin off by more than 1% as part of the Trump trade following yesterday's presidential debate between Vice President Kamala Harris and former President Donald Trump. Now let's get to those midday equity movers and bring in Abigail Doolittle. Abigail, what do you see?
Well, one reason we're off those lows, Scarlett, because at the lows we did have the S&P 500 down well more than 1%. I think even down more than 1.5%. Take a look at NVIDIA right now near session highs or at session highs of 4.3%, really holding well above $100 per share, which seems like a dividing line, at least technically. And it's interesting because, of course, is one of the biggest weightings to the S&P 500 and the NASDAQ. It's taken both of these indexes off of their lows, and the NASDAQ 100, last time I checked, positive. You can see the other chip stocks, including some of the semi-cap equipment companies, going higher. It's not clear why NVIDIA is higher. I don't see any fundamental reason on the tape, but it just seems as though some of those dip buyers are moving out. moving in. As for what is still dragging on the S&P 500, if we take a look at the shares of Tesla, they are down 1.5%, maybe after that debate last night. Of course, CEO Elon Musk is aligned with the former president, Donald Trump, and there's some idea that his showing in the debate last night was less strong than VP Harris's. Visa, PepsiCo, and McDonald's, all these stocks lower. I'm not able to find reasons why, but I would argue that these are the value stocks, that they could be associated in some ways with the Trump trade. So this board, I think the case could be made that it supports the idea that markets are weighing in, saying that Donald Trump did not perform as well as VP Harris yesterday in that debate, last night in that debate. When we put it all together with the S&P 500, one reason to think that NVIDIA probably is going to struggle going forward is this chart that on today's earlier weakness really turned very heavy. This is a consolidation area. You could call it a range. You could also call it a possible double top. That's pretty wonky, but below the 50-day moving average, today's candle bar there that you can see almost below the last low, setting up, Scarlett, for what could potentially be a very fast drop back toward the summer's lows. We don't know that that's going to happen, but this chart does skew pretty bearishly. So let's stay tuned. We'll be here to report on it.
All right, fantastic. Thank you so much, Abigail Doolittle, for that setup. Now, with these downside risks present in the technicals as well as the eco data, we caught up with Bridgewater's Rebecca Patterson about the latest inflation numbers. Here's what she said.
It is time, given the inflation data, given the labor market softening, for them to move closer to neutral. The question, I think, that I don't think is resolved yet is what is the speed of that easing to get back to neutral? And then what is neutral? I think there's still debate on what the long-term neutral rate is.
For more on how investors are interpreting all this data, let's bring in Crossmark Global Investments Chief Market Strategist, Victoria Fernandez. Excuse me there. Victoria, it is so good to see you. I look at what happened in the markets right at the open, the S&P 500 plunging as much as 1.6% within the first 70 minutes of trade or so. It felt like an outsized reaction to a modest move higher in the core CPI month-over-month basis. Everything else was pretty much bang in line with economists' estimates. Was this an outsized reaction to you?
Well, I think it was a surprise to many people. If you listen to what a lot of the market participants are saying, and even to what Powell is saying, they weren't worried about inflation anymore. Inflation was under control. It was going to be moving in this downward trajectory, and they were focused on the labor market. You know, we always put an asterisk by that and saying, look, we're not sure that inflation is going to continue to move down consistently. There's some stickiness here, and there's actually some areas of the market that are going to be moving higher. And I think that's what we saw today. You saw airlines move higher, used cars move higher. I mean, year over year, everything in the core component is 5% to almost 20% higher year over year still. So I think it maybe was a little bit of a shock to some people in the market that inflation could still be a concern, and therefore probably took 50 basis points off the table for the September meeting, which the market had already priced in. I think that was probably the catalyst for such a big move.
Okay, got it. Now, how much anticipation, nervousness do you think there is ahead of tomorrow's PPI report, given the CPI print we got today?
Yeah, usually there's a little bit less volatility around the PPI report. I don't think we'll see such a large move, even if it is a little bit higher than expected. However, PPI report usually does not give us so much angst as the CPI report does. It will, however, give us a look into, do we need to revise earnings expectations going forward? You know, there's people that still have these double-digit earning expectations, and if PPI moves higher, we know that those margins are going to take another hit in the coming months. So perhaps there will be some revaluation going on if PPI is significantly higher.
Okay, really, really important points there. And I'm glad you bring up earnings, because I think about the financials and the kinds of pressure that they've been under recently. JP Morgan Chase, for instance, is down for a 6th day in 7. And it was just yesterday that the president, Daniel Pinto, said analysts are being too optimistic in projecting the bank's expenses and net interest income. And that kind of took down the entire bank sector overall. How big of a surprise do you think that was to investors who had kind of like put aside the idea of banks as being an area of potential negative surprise, given that they've done so well with higher rates, and with rates going down going forward, the funding costs become a lot easier for the banks?
Yeah, well, Scarlett, look, banks have been an area that we've liked all year. We've been trimming some of those tech names and buying financials over the last few quarters, and they have done really well, as you mentioned. So they were probably ready for a little bit of a pullback. But look, financials are still in an uptrend if you want to look at the technicals of that sector. So we actually look at some of the pullbacks that you're seeing as buying opportunities, especially leading in to the first Fed rate cut. Historically, they come off a little bit before the first cut, and then following the first cut up to about 6 months, you see them trend higher. So if you can buy them now at a little bit of a lower price, I think you can do that. But from a bigger perspective in regards to earnings, I do think the market's going to have to reset some expectations across the board for earnings on the revenue side, especially leading us to some concern around the consumer and around jobs as we head into 2025, because we know as revenues come down, in order to keep those earnings higher, they start cutting jobs. So I think it starts kind of a snowball effect that we could see in the rest of this year and into early next year.
Yeah, really important points, especially as we see companies like Designer Brands International, which is the owner of DSW, come through with disappointing comparable sales numbers. Speaking of the different sectors here, you mentioned consumers. We were talking about the financial sector. I look at the worst performers for the past 5 days, for the past month, and for the past 3 months, and it's always energy. Energy is the bottom of the pile here. For the past 3 months, it's down about 6.8%, and oil prices have just been going down, down, down. How are you viewing this sector?
Yeah, so look, you're asking a girl that's sitting in Houston right now, right, on what we're thinking on the energy sector. Long term, you want to have exposure to energy. Have we had this pull down? We have, because now the United States is producing more and more. There was some concerns around OPEC Plus and the supply that they were going to have, and increasing supply there. That came off a little bit, and so you had prices rebound. You're going to have a lot of volatility here with geopolitical events. We have the hurricane that should be making landfall, if it hasn't already, in Louisiana and our neighbors there today, that could affect prices. So there's lots of volatility going on in energy. What I would say is that these are companies that have strong cash flows and pretty solid balance sheets with good dividend components for many of them. So I think you can have them as a long-term holding in your portfolio, but I would be a little cautious if you're looking at trading them on a daily basis, because the volatility will remain high.
Yeah, the volatility will remain high. We certainly see that with WTI and Brent consistently moving lower. I know they're a little bit higher today with Brent currently above $70, but unclear how long that will be the case for. Going forward, until the FOMC meeting next Wednesday, what will you be focused on? What will the market be fixated on until then?
Well, I think there's a few elements. Probably, you did say we have PPI coming out tomorrow, but on top of that, we have more jobs numbers coming out. And even though these aren't going to be the main numbers that everyone looks at, it's going to help either build a story that the labor market is weakening, or it will give us a little bit of support to say that things are maybe stronger than what they anticipated. I do think we're seeing that sector weaken. We'll see what the weekly claims look like. Continuing claims is important because some of those people actually on continuing claims are moving off of those roles and into the ones that are 27 plus weeks. That area is actually moving higher, causing some concern. We're seeing full-time workers decline and part-time workers increase. That's not a good sign for the labor market. So there's some elements there that I think people will be focused on, since the Fed is saying that's what they're focused on.
Absolutely. I look at initial jobless claims, and the initial estimate right now is for 227,000 claims for unemployment. Victoria Fernandez, thank you so much. Crossmark Global Investments Chief Market Strategist, joining us from Houston. Now, coming up, NVIDIA's Jensen Huang says it's been a scramble to satisfy some of its more passionate customers while dealing at the same time with supply limitations. NVIDIA is our stock of the hour next. This is Bloomberg.
Delivery of our components and our technology and our infrastructure and software is really emotional for people, because it directly affects their revenues, it directly affects their competitiveness. And so we probably have more emotional customers today.
That was NVIDIA CEO Jensen Huang speaking at the Goldman Sachs conference in San Francisco. Investors have been anxious to get updates on the rollout of NVIDIA's Blackwell chip, its next generation chip. NVIDIA, by the way, is our stock of the hour. Joining us now for more on this is Melissa Otto. She's head of TMT research for S&P Global Visible Alpha. Melissa, good to see you. Engineering snags, the manufacturing delay of Blackwell has really agitated investors over the past month. But these are normal things in the production of chips, isn't it?
Thank you. It's great to be here. I just came from that presentation at the Goldman conference. It was fascinating to hear Jensen as usual. I mean, he had a lot of exciting things to say. I think in terms of Blackwell, a couple of critical points that he highlighted. Demand is so great. As you highlighted in the opening quote from him, it is an emotional time for customers. And I think, as we look out and think about what the expectations are for Blackwell, there is a lot of debate out there. Based on Visible Alpha consensus, coming into the Q4, consensus is expecting $2.5 billion in revenues from Blackwell, and then looking ahead to next year, that jumps to $55 billion. But the range of estimates for next year is very significant. We see estimates that are significantly above that $55 billion as well as below. So I think that may be contributing to some of the volatility and debate out there in the market around what the real valuation is for the stock going forward.
Yeah, that's a really important point, because one thing that Jensen Huang did say in last month's earnings call was that NVIDIA expects to bring in, quote, several $1 billion in revenue from Blackwell in its fiscal fourth quarter. For investors, that wasn't specific enough. Is this the right data point for everyone to fixate on?
This is the next gen, right? So this is where it's all headed, which seems to be where the investment community is very focused. Coming into the Q3, there isn't much expectation for Blackwell, so it means that the guidance that the company gives in Q4 and what they deliver actually in Q4 are going to be critical data points, whether or not they exceed expectations in the quarter and whether or not their outlook for next year exceeds that expectation of that $55 billion revenue level that's baked into the market currently.
I think that's really important, the fact that there isn't a whole lot of expectation placed for third quarter. So it's really going to be on how much they can narrow or how much he can narrow his commentary for the fourth quarter. That being the case, Melissa, do you think Jensen Huang has done a good job managing investors' expectations? What kind of grade would you give him?
He's an exciting speaker to listen to. He's very inspirational. I think it's really going to come down to a lot of moving parts and how the company is actually able to, one, deliver this next generation of capabilities to its customers. And that's not just about one person. That's about his whole company really working together with suppliers and the whole ecosystem with customers to ensure that those expectations are aligned. And that is certainly no easy task.
All right, Melissa Otto, always a pleasure speaking with you. Melissa is head of TMT research for S&P Global Visible Alpha. Coming up, Bloomberg's Sonali Basak is at the Cantor Fitzgerald trading floor with NFL star Rob Gronkowski. He is raising funds for charity as Cantor Fitzgerald marks 9/11 with a special fundraising event. We'll bring that to you live. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It is the 23rd anniversary of 9/11, and celebrities are roaming the Cantor Fitzgerald trading floor today, calling clients in an effort to raise money for Cantor Fitzgerald as well as their own charities. Bloomberg's Sonali Basak is there, and she joins us live now with one of those celebrities, an NFL star. Sonali?
Yes, you may remember Rob Gronkowski, of course, of NFL fame here, formerly of the Patriots, now here for Charity Day at Cantor Fitzgerald. What brings you here?
Well, this is actually my third year coming here with Cantor Fitzgerald, and this is my third year in a row coming with my girlfriend Camille as well. And when I first heard about it, first got asked to come, I thought it was a no-brainer. I mean, Cantor Fitzgerald just does such a great job remembering those that were fallen, that are deceased from the 9/11 event in 2003 that occurred. So it's just an amazing tradition what Cantor Fitzgerald is doing just to remember everyone, that has passed away, and just bringing awareness to that situation, and just raising money for great causes out there as well. And today we're actually raising money for my foundation as well, too, the Gronk Nation Youth Foundation, which is really cool.
At the end of the day, too, what's been interesting is watching you and many other celebrities here placing trades. What are you thinking about in terms of your career now after football?
Well,
you seem to be quite the businessman.
Yes, I am quite the businessman, that's for sure. I'm doing a lot of things out there. My favorite opportunity is a new salad joint, new salad venture that I've invested into. I'm a co-founder, and it's actually just started in the Florida area, in the Tampa geography. We got 3 stores now, and we're going to be just expanding rapidly. But also here, I want to bring the stock market back. I heard it's down right now with the election thing and everything that's going on. So I'm here at Cantor Fitzgerald to do some trades. I want to do the biggest trades of the day and bring that stock market so it's just booming back, back up to the sky.
Well, we'll absolutely let you know where the day ends today. I'm also interested in other forms of business and sports together. We have seen recently the NFL approve private equity interest in teams. Really curious about where you think that's going to take things moving forward.
Well, I mean, I didn't know about that. That's the first time I was aware of that situation. I really don't know how that works, the private equity, with teams in the NFL. I mean, I'm not at that stage of being an owner of a team or participating of being an ownership of a team. Yes, I would love to own a team. I mean, I feel like the NFL only goes up and up and up, and Tom Brady is actually on the verge of owning a team, and what an excellent gig to get into. That would be amazing if he does, because then he can maybe break the barrier of players getting in to ownership. So hoping that all falls through, and he deserves it as well, everything that he has done for the game. But with the private equity stuff that we're talking about, I'm not too familiar with it, so I really can't comment too much.
Your former teammate, you mentioned Tom Brady here, starting his career as an announcer for Fox. How do you grade his performance?
Yes, he did really well. I feel like he was a rookie out there, a highly anticipated rookie. I mean, there was a lot of hype. I think there was a little bit more hype than there should have been. I mean, I kind of put him on a pedestal of that he had to perform like he was shot out of a rocket ship, but I think he did an excellent job, and I feel like he's just only going to improve. I know him personally. He loves to improve. He likes to work on anything, any chance he has to, any opportunity he has to get better, he's going to do, and he's just going to improve week in and week out. And I give him a passing grade. He got the win in his first job, in his first opportunity of being an analyst.
What about you? What is your future media career looking like? You see that deal that Amazon struck with the Kelsey brothers, $100 million podcast deal. Mm-hmm. Do you want something like that?
Maybe, I just want to do some stuff that I love to do. Like I said, I got into business, co-founding the salad place. Actually, I'm a co-founder of my brother's company, too, Ice Shaker. And the only reason why I have this on me, because I thought it looked cool with my shoes, and I put my protein shake in here this morning because I was on the go and spilled a little bit of it right here. But that's what happens. But love just getting into the business world. I mean, I'm actually starting a podcast with Julian Edelman as well, and we're actually filming our first 2 episodes this Friday coming up. We're going to film the first 2, and then we're going to release it once every week on Thursday nights throughout the football season. So that'll be fun. I mean, I'm enjoying what I'm doing, That's what's most important. I mean, I'm set for life for my football career, and it's really about enjoying and doing what I love to do. And hanging out with Julian and that crew is fun. Hanging out with the Fox guys when I do the Fox gig of the pregame show. They're great guys to hang out with, and just all the business ventures I'm in as well. They're with my friends and family, and love to do all that too. So I'm happy where I'm at.
Just 20 seconds. Too early to ask you who's going to win the Super Bowl this year?
Oh, man. I mean, I think the Kansas City Chiefs are going to be the team. I mean, you got to knock them off. I mean, I had Baltimore maybe being it, but they just showed it once again that they can't beat the Chiefs, that they can't, amp up their game when needed. They can't win the big game. So I'm going to go with the Chiefs again. I mean, they're going for the three-peat. I mean, hey.
Rob, thank you so much for your time. Of course, that is Rob Gronkowski. Scarlett. Back to you.
All right, Shanali Vasic, thank you so much. Rob Gronkowski making the call that he is looking for the Kansas City Chiefs to be three-peat Super Bowl champions for this season. And we'll take a look at how the markets are faring, because he says he wants to bring the markets back up. You do have the S&P 500 steadily paring its losses. It is now only down 0.25% after earlier falling 1.6%. The NASDAQ is higher. The NASDAQ 100 gaining 0.3%, led by some of those chip makers, including NVIDIA. We have a 10-year auction coming up in just minutes from now. The 10-year yield currently at 3.66%. This is Bloomberg.